Hey guys, how you guys doing? I hope you're sharp. In this new episode, we're going to be talking about candlestick patterns. So remember in the previous video, we talked about the anatomy of a candlestick. Now we are going to assess that even further and talk about, the patterns that those candlesticks can come in. Whatever. So just make sure that you've got a piece of paper and a pen before we proceed. So remember I said that candlesticks, as much as this is the standard form or shape that you can have of your candlestick, but remember it's not always gonna be like this. As the market moves throughout the day, it's gonna form different types of bars. Something can be like this, something can be smaller body and long tail. So you must be able to interpret all of that and make sense of it. Know that when the bar is like this, what does it mean? And when it comes like this, what does it mean? So that's what I'm going to cover in this video. So I hope you subscribe, because I'm still gonna give you more videos in the future. So let's see. So the first one, it's the normal bar. Like we're just gonna start with the standard one. So the standard one will be something like this. So we're gonna use the red for the bars that are going down. So here we formed them when you're going down, and then we can use a different color. Maybe let's use blue for the bar. We're gonna make the same bar, but now we say this one was formed when you're going up. So this one was formed when we were going up. So this type of a bar, if I have a bar where the body is this big, the body, because remember the body starts here. So where my body is this long and the small tails, it means that during that time, if you form this when you're going down, it means that during that time, the people that were pushing the price down, or the people that were selling, the sellers, their strength was very much powerful than the people that were buying. That's why the price ended up going down with that strength. So that's the type of a bar where you see the body is too big and the bar is bearish, or the bar it's the bar was formed when you're moving down. It means the sellers they were very aggressive. So this type of a bar, it tells me that the momentum was very strong to the downside. The sellers were in control. So the opposite will be true for this one here, where the body is this big and it formed when you're going up. It means now here the buyers were very aggressive and they were very much in control. That's why the price managed to move from here and close all the way up there, and the tails were very small. So that's the type of a bar that you can have, or that you're gonna see on your chart as you're trading. So the body is gonna be this big. That shows that the momentum in that direction at that time was very much strong. So what does that mean with this very first type of a bar that you can have on your chart? Obviously, when you're assessing or when you're analyzing, you won't just look at one bar and make a decision that I'm gonna buy or I'm gonna sell. But every time you see a new bar on your chart, you should ask yourself, what does this mean? So in general, if a bar, it's not to say that when you see that you must buy or you sell. But if this was formed when you're going down there, and it looks something like this, it means that because the momentum is very much strong to the downside, I cannot buy. So buying is not allowed. Not to say that I must go and sell, but if I was planning to buy, I must hold on. I must wait. So at this point in time, the momentum is very much strong to the downside. So if I buy, the chances are that this momentum is gonna carry on in the next bar and continue going down. That's not always the case, but when I see this type of a bar, it tells me that the sellers are very much in control. I must wait until things clears up a bit, then before I can go long if I decide to go long. So this shows me that the sellers are in control. So if I want to buy, I must wait. I must be patient. So the opposite will be true for a bar that was formed when you're going up. So it means if I want to sell there, I need to be careful. I cannot do something like that when the candlestick is very much pointing to the upside. But now, what about a bar that looks something like this? So let's say the price is moving up, and then all of a sudden at the top, it forms. Okay, let's use the same, so that I don't confuse you. We're gonna stick to the same colors. So let's say the price was going up. So we use blue for up, and then all of a sudden when the price gets to the top, it forms something like this, a bar that now looks like this. So when this happens, what does that tell you? This tells me that if you watch the previous video, it tells us that the price opened here, opened there, and then it closed here. And it once went up there, but it managed to close up there. It came back and closed below. So this bar, this type of a bar, you can refer to it as a pin bar, or some they would say it's a rejection bar. Rejection bar. Some they will even go and give it the weird name doji. I think it's some they call it that, a doji. So, but to keep it simple, because this is a new term to you, so you can just say a pin bar, because you can see it has like a pin. It's like a pin bar or a rejection bar. So what does that type of a bar tells me? It tells me that the bulls or the buyers or the people that were buying, they were very much in control, managing to form all these blue bars going down, but all of a sudden the bar is red and it has this rejection here. It shows that the bulls or the buyers, they pushed the price up, but they got rejected and pushed down, and then they came and closed there. So it means that this could be a sign that the price could be about to change. Not to say that every time you see this type of a candlestick, you must go and sell. No, but if you were to assess, like I said, every time there's a new bar that is formed on your chart, you must ask yourself, what does this type of a bar tell me? So if this one, the people that were buying, they were in control, and then all of a sudden we see that they could be losing momentum. So that's the first possibility. So if they are losing momentum, it means we could be, change in trend could be approaching, because we can see that the buyers are no longer fully in control, because if they were fully in control, they would continue, forming this nice uptrend with the blue bars. But now when you're seeing this pin bar, it could be a change in a thing. That the rejection bar tells me that whoever that was in control now is starting to lose their touch, because here we're talking about the bulls. If they were pushing the price up, and then all of a sudden there at the top they formed this, it could be a rejection. It could be that the momentum where you're going up now is changing. Now you're gonna have a trend to the downside. So that's the type of a bar that every time that you see on your chart, it will tell you that now we could be changing the trend. Obviously that's not how you're gonna trade. It's just that here we're just assessing the individual bars. We're still gonna, in the next videos, I'll be explaining how we're going to assess, the group, where we're going to be grouping all these bars and assessing them rather than assessing them individually. So it's just that I'm taking it step by step. So here you just need to know that, I already explained the anatomy in the previous video. Here I'm talking about the different candlestick patterns. There could be a lot depending on where you get your information from, but I promise you that some of them, they are not useful. They are not really useful. So to me, from me, if you were to take it from me, I would say you only need to know about a candlestick that looks like this. What does it mean? And a candlestick that looks like this, or the one that looks like this. Let's say we're going down, all of a sudden you have a blue bar that is like this. What does it mean? So both of them, they are rejection bars. It's just that the other one is red, the other one is blue, meaning the other one was formed when you're going up at the end of the trend, when you're going up, and then the other one was formed at the end of a trend when you're going down. But both of them, they are rejection bars, which could be signaling a change in a trend or a rejection from that point. So this, look at rejection in this way. The rejection, you should look at it this way. So let's say we're going down, then all of a sudden we have this. When you're going down, I said we're going to use the red color red. So this is a trend to the downside. All of a sudden we have this bar at the bottom, which is blue, and you can see that the people that were selling, they managed to push the price down, but they failed to close down there. They closed above. They opened here. They closed above. So this rejection here, could be signaling a change in the trend. So that's another thing to say that if I was, I was busy selling. Let's say I was selling from the top, sell. The moment I start to see this, I'm starting to be worried. Should I close my trade? Should I, should I continue holding and hope that this will continue dropping? Or what is it that I need to do? I cannot just, I see this is forming and I have a trade that I took from there. I took a sell there, and then this is forming. I'm just chilling there and bothered, like, no, it's fine. I know it's going to continue dropping. This could be a signal that we are about to change. So if you've got a trade, better do something about that. You can either close half of it, or you can close the whole thing, or you can put the stop losses where you know that you locked in enough profit, so that should it go up, it doesn't take all your profit, it takes a certain portion and then it kicks you out with the profit that you locked in. You get the point? So those are the things that I think you should be able to to see when you're opening your chart. You just need to know about a rejection bar, and that big bar. You can say some people they call it extended range bar, which is this one where the range is just this long bar. Some they call it the extended range bar. So you just need to know this type of a bar and this type of a bar, or this one. So those are the ones that I think they are very, very important for you to note. The rest, they are not that important, so they will just be there to confuse you. You won't even understand the logic behind them. There will some they call them the shooting stars, morning star, evening star. I don't think they're important. You just need to know this type of a bar and this rejection bars. Those are the ones that I think the logic behind it is very much clear. This one, it shows that whoever that pushed in whichever direction that we pushed in, this person was very aggressive. They are very much in control. So if we were formed it going down, it means that chances are that will continue dropping like that. And then these ones are sort of rejection. They could be signaling that the trend is about to change. These two. So I think those are the only ones you need to know. The rest, forget about them. So now let's talk about where we are grouping these candlesticks. So how would you assess? Because when you're trading, you can't just assess the individual candlesticks like that. Sometimes you have to group them. What happens if, let's say, we were going down, forming nice bars to the downside, and then this is the last bar that we formed when you're going down. All of a sudden, the next bar, it looks something like this. Should I get scared, or should I just say no, this is just a pullback, we will continue dropping, or what? How do you think, Uguti, a candlestick that looks like this, all of a sudden we were going down nicely, all of a sudden we see something like this? Should I be worried? I think you should, because this type of a pattern, these two candlesticks, when they are like this, we refer to them as an engulfing pattern. And what does that mean? That means that we were in one direction, we were moving to the downside. All of a sudden we have this the bar that is formed of the different color, or of the opposite color. Remember, we're going down with the red candlesticks, and then we have this blue color or candlestick that shoots up and covers the previous bar completely. So look at it. This is the last red bar that we have, and then all of a sudden we have this one that covers it, because remember the body ends there, and then this one, the body, it engulfs the previous bar. So that's why we refer to it as an engulfing bar, which could also mean that now all of a sudden the bulls or the buyers are very aggressive. So this could also mean, it could also signal what? It could also signal change in trend, the engulfing pattern. So that's that's the pattern where, because remember there I was just showing you the extended range bar and the rejection bar, which are just individual bars. But what about when we are grouping them together? We can have one where the next bar just engulfs the previous one completely, which is engulfing pattern. Or some, they can, I think that's the only one now I think you should know about. I think, let me just make a list of the stuff that you need to know, which is gonna be we'll be ending this video. The rest, stay away from the rest of the noise that you find on the internet. You just need to know rejection bars. In the next videos, I'll show you how to spot these ones on your thing, how to sort of use them when you're trading. Rejection bars, you need to know extended range bar, and that rejection bar means that we are sort of being rejected and we could be changing the trend. Extended range means that if I formed you and I'm going up, the bull seems to be very aggressive. They seem to be very much in control. This uptrend seems to be going strong. And then also engulfing, which means that we sort of engulfed the previous bar, then we could be changing the trend. So these ones, they could go hand in hand. When you see them, you should be thinking, oh, is the price about to change? Then you start planning around that. So next we're gonna go on the chart, the actual chart, and try and spot these three on a live chart. All right, so let's start with this one here. You can see that the trend is sort of going down, and then all of a sudden we have this sort of rejection, or you can see that this one doesn't have a body, so it's just a bar that has tails on either side, or the shadows. So this is sort of, you can see that the tail is not like, sometimes you'll have a tail that's like this, then we can see that the tail is more on this side. So this is sort of, the people that were trying to push down were rejected, but in this case it's sort of the same. So that's where this type of a candlestick, we call it shows that there was so the bulls and the bears, or the buyers and the sellers, they were undecided here. No one was winning this battle. So when this forms, price could go either way. So in the next one, the bulls won eventually, as you can see there. So this one means that, let's see. So I want to show you something. So this is the ERC that I was talking about, this type of a bar. It shows that the bulls here, they're very much angry, the bulls here. And what did that mean? It means that they could be continue pushing in that direction. Look what happened. They continued pushing until a point where we can see that the bars that now we are forming, they are no longer that strong. The momentum is dying out. And then all of a sudden we dropped. You see, the signals were there that we could be, this upward move could be coming to an end, because we're making nice moves or nice bars to the upside. All of a sudden we've got these small bars, tight bars that are just there, so it could be signaling that the price could be about to drop, so that's the ERC, the extended range. It shows you that whoever that's pushing in that direction is very, very much aggressive. And you can also see the one of the opposite color here, it's continued pushing down, or all of a sudden we don't have another extended range. This is a warning that what's happening now? Are the sellers running out of power? Are the bulls about to come in? So those are the questions that you're asking yourself as soon as you see that the price is no longer moving the same way. It was moving nicely with the strong bars to the downside. All of a sudden it forms something like this. Then you should start asking your questions, asking yourself questions. You can't just ignore something like this. You can see that there's a change in the structure on your chart, and you are trading. So you need to ask yourself, why is this happening? Then as soon as you do that, then you will see that most of the time you will be on the right side of the market. And then let's look for a rejection bar. We can use this one here. Price going up, and then bulls being rejected here. Being rejected, and then you can see even here they tried to come back to life. Here they tried to push the price up, but they were rejected again. Then boom, the bears or the sellers, they continue to push the price lower and lower. So I think that's all that you need to know. Okay, let's look for engulfing. Let's look for engulfing pattern. Yes, the engulfing pattern, we can use this one here. You can see the price is going up, and then here, look what happens here. Look what happens here. These two bars here, and now it shifted. Let's just move it back. These two, this one and this one. You can see we're going up, and then the next black bar, this one engulfed that one. It covered that the body of the previous bar completely, which means as much as I was in control, moving nicely, could this be signaling that the price is about to go in the opposite direction? And it did turn and go down. You see, so those are the signals that when you are trading, you cannot just ignore. Okay, that's why I'm saying all you need to know is rejection bar, an extended range bar, and also engulfing. So in the next videos, I'll show you how to take trades using this. So for now, you just need to be able to spot them. So if you can open a chart or be able to identify, or here I have a rejection bar, here I've got a nice extended range in the opposite, in the upside directions, things like this. and here I've got engulfing pattern. Then you see, analyzing a market won't be much of a challenge. So I think I should end this one here, and then in the next video I'll take things even further. Here I just wanted you to be able to identify, which you'll be able to know which bars, patterns that are worth knowing and which ones are not. So the ones that are not worth your attention, I'm not even gonna mention them because they are most likely gonna confuse you. So all you need to know are this. So only keep these ones in your head. Then you'll see that even in the next videos that I'm going to upload, we'll only be referring to this even in our analysis. So I think I'm gonna end this one here, and then I hope you learned something, and then you can always play this video over and over again and make sure that you practice, because I'm assuming that you are only starting with your trading journey, and I can assure you it's not gonna be easy, but you must just keep on pushing. Give it time, don't rush. You can't just watch 2 videos and already you open a live account and start trading, because you're going to make lots and lots of mistakes. So I think you should just give it time, and then learn as much as you can. You can just continue. I'm gonna upload more videos and try to help you as much as I can, and then yeah, I'm sure by the time you get to the, I don't know how video number mang, but you'll be able to open the chat and tell you, be able to tell me what's happening on the chat, ne? So this one I'm gonna end it here. I hope you learned something, and then don't forget to like and subscribe, and also refer the channel to recommend it to your friends that are also new in learning how to trade, or those ones that are also they've been trying but they don't seem to crack it. You can also refer them to this side, because here I'm just learning. I'm still starting with the basics, but I'll eventually get to the stuff that covers accommodates everyone. But everyone can some they've joined months and months ago, but they're still not getting it right. They must come here. I'm waiting for you all. Here I'm just gonna try and simplify everything for you. So I'll see you in the next video. Make sure that you like this video, you comment, and then leave your comments so that I know. Sometimes it helps when you leaving comments so that I know on what to touch on in the next video. But for now, let me go in on my own pace, and then I do have a list of the stuff that I want to cover first. Then I'll give you guys the platform to suggest on what I should cover in the next video. So don't forget to subscribe. I'll see you in the next one. Sharp.